Hey there, folks. This is Bob Desmond over at the Contrarian Trader, and welcome to our stock chart of the day, which is the United States Oil Fund, symbol USO. The USO puts you long of crude oil, and the topics that we'll discuss during this video are where the USO has been, where it is now, and where I think it's going to go short term and then longer term. And at the end of the video, I'm going to give you my final conclusion longer term on where we believe the best trade directionally should be on the USO. So let's begin not with a daily chart. Let's begin first with a 2-hour chart. Why am I doing that? It's because the 2-hour chart, which is an intraday chart, is implying that tomorrow morning we will rally. Why do I say that? Well, we closed out the day with RSI at 18.70, and we're leaning into the third standard deviation Bollinger Band. So I would expect a rally tomorrow morning. Might it open down? Sure. But I think that we will get a brief counter trend rally, and then we will probably roll back over again. So let's just get that out of the way. I expect a brief rally tomorrow. So the 2-hour chart being out of the way, let's talk about the weekly chart, because that's where I like to begin my analysis of any stock, because it tells me a story. It's that 30,000 foot view, a very high level view of where we have been, what type of technical damage has been done. Are we forming a base, or have we been consolidating, setting up for a continuation breakdown? And in this case, it appears as though the USO is setting up for a very, very serious breakdown. Now, why do I say that? Well, let's begin with the RSI. Now, the RSI, which is the relative strength indicator, broke down the week of February the 13th. Think about that. We had an indicator leading price performance nearly a month ago. And it's just this week that the USO broke down below a key support level and is now heading down to test this lower band of support. And if we break support on a weekly basis, we're going down to $10 per share. If that breaks, $9.56. If that breaks, we're going all the way back down to retest the 16 lows. Now, taking a look at volume, volume is still rather muted for a very, very serious technical breakdown. But again, this is a weekly chart. It's only Wednesday. Volume can pick up. Williams percentage R was telling you several weeks ago, just like with the RSI, that we were putting in a lower high, and then we broke down the week of, oddly enough, February the 13th, just like we did on RSI. Stochastics, they broke down after putting in a lower high the week of February the 27th on the fast line. So the price of the USO is now confirming with its breakdown what the indicators have been telling us for weeks now. Now, we can argue that the stock market is corrupt, but if you know how to read charts, because it is corrupt, and I can go on all night long about it, but if you learn how to read the charts and you pick up on the market signals, you'll identify when to get short, when to avoid a stock, and when to get long. Daily chart. All right, so on a daily basis, the market's been sending us signals for quite some time. We were in a trading range, which began, let's say, the beginning of December after this gap up. We consolidated, traded sideways, a bunch of failed breakouts, and note all of these hollow, or at times they're called filled candlesticks in black. Those are signs of indecisions. They're akin to being doji star formations. You don't want to see them at the top of a trading range if you're bullish, because what happens? You break down. And time again, we've seen this. Now, if you would have asked me 2 weeks ago, Bob, would you short the USO? No, I wouldn't have said to short the USO, but I would have most certainly said Don't buy it until we break out above this upper band of resistance. But now that we're taking a look at this chart, because we broke down below this lower band of support on the 2nd, attempted to rally back, recapture that support level, only to fail. These were sell signals. These were signals by the market that you had to get out today. It gapped down, bearish reversal. I will be shocked if this support level holds for very long. Why do I say that? This appears to be fairly good support, right? Take a look at the volume. This is institutional distribution. This is not mom and pop selling 100 shares. You can't fight these guys. And in addition to the institutions dumping shares, if we break support below this key support level, you're going to have the algos leaning into USO to the short side, and you're going to be fighting a battle that you simply can't win if you're looking to get long. So please don't go fighting what appears to be setting up as a new downtrend. Or I would actually say, going back to the weekly chart for a moment, a continuation breakdown in a secular bear market. Now you may be asking, what is this black line here that I have overlaid? What this is the high yield debt market. You remember going back to the final days of 2015 and into 2016, oil was getting crushed. And we had the high yield debt market that was getting crushed as well. When we entered 2016, we immediately went into a correction on the US stock market. So what we're doing here at the Contrarian Trader is that we are looking for catalysts that are going to send this market lower, because we've been building short positions in this market for several weeks now. And we added as recently as today, and we'll be talking about our positions and where we're going in this market with members on Market Wrap. So members, expect that video coming out shortly. And if you're not currently a member, please sign up for our 14-day free trial offer. If you enjoy these videos, please leave a comment wherever you're watching this on, social media, on my blog, wherever. Please be sure to follow me. And if you want these sent directly to your inbox, please enter your email address. We hate spam too. I guarantee you will not be spammed. And before I sign off, with regard to my call longer term on the USO, I think we're going a lot lower, folks. All of these charts, with the exception of the 2-hour chart, which is just short-term oversold, it'll probably bounce and roll over. All of these charts are breaking down. The technical damage is not only short-term, it's long-term. We are in a long-term bear market on oil, and with the dollar rising, it's only going to make the sell-off worse. So USO, I'm a big bear on. Everybody have a great evening. Be well.